Good afternoon, everyone. My name is Feishola Oyeti. I'm a senior associate with Odujiri and Adefulu. The topic for the session is alternative currencies in the digital age. This session is sponsored by Aluko and Oyebode and Bloomfield Law. Meet our panelist and moderator.
Good morning. My name is Akin Sawyer. I am the Chief Innovation Officer of a firm called OnRamp. We help financial advisors around the world gain access to cryptocurrency and crypto assets for their clients. I also run a small pre-seed investment fund called Fellowman that invests in the digital asset space. I'm going to be your moderator today. Just to kind of give you a little bit of background into how the session is going to run, I'm going to let all the panelists introduce themselves and kind of give you a little bit of insights into their backgrounds. And then we'll have a session for about a half hour to 45 minutes, just discussing pertinent topics in the area, giving you an overview of what's going on in the space. And we'll leave about 15 minutes at the end for Q&A from the Wover app. So without much ado, let's start. Rotimi, can you start with an intro of yourself?
Thank you very much, Aki. Thank you, everyone. Great to be here. So I'm a lawyer. I specialize in technology law. I particularly look at regulatory and policy issues, and also work in that. I work at both ends of the spectrum, actually, advising government on policy and advising industry players on how best to navigate the regulatory space. Thank you very much.
Awesome, thanks. Michael?
Hi there, my name is Michael Ogu. I'm the CEO of Freeme Digital. It's a large digital studio in Lagos, Nigeria. So primarily we're involved in the media industry. However, I've been involved in the crypto industry for the last 3 years or so. I'm primarily focused on DeFi's, investing in DeFi protocols, but also NFTs. So that's non-fungible tokens. My background prior to that was as an investment banker in Lagos, Nigeria, before I moved into the media space. I've been involved in a range of businesses. So my perspective on this discussion today will be that of an entrepreneur and investor, as I also invest in a number of crypto companies based in Lagos, Nigeria, such as Bitcoins Africa, coinprofile.co, and nabu.com. All players in the blockchain space, primarily focused on the West African territory.
Thanks, Michael. Victor?
Hi, everyone. Good afternoon. Thank you for the opportunity to be here. I work as a finance professional. I work in investment banking. I lead Afrinvest Capital, investment banking subsidiary of Afrinvest West Africa, where I also double as the Group Deputy Managing Director. So overseeing both the asset management and securities trading sides of our business. My participation here really is to bring the perspective of finance and essentially organizing markets. What role can blockchain and cryptocurrencies play, within the context of what capital markets offer to both operators, either on the side looking to raise capital or for investors looking for channels to deploy capital. I'm also personally an investor into cryptocurrencies, having done that for the last 4 years as well. And I think it's an interesting space that, if for nothing else, one needs to closely follow. So thank you.
Thank you. And Carmel?
Hi, Akin. Thank you for having me. My name is Carmel Cadet. I am the founder and CEO of MTech, a fintech for central banks. We help central banks modernize and when it comes to innovation and also digital currency. The era of digital currency is something that's very interesting to us, and we think the regulatory landscape and framework and the regulators being engaged in this conversation can really further this space. My background is in enterprise IT. Previously, I spent 10 years at IBM working in IBM blockchain and corporate treasury and corporate finance. I'm happy to be here to talk about this dynamic space.
Thank you very much. So we have a pretty good representation of individuals who have been in the space for a period of time and kind of cut across a number of sectors within the crypto asset space. To kick things off, Michael, could you sort of give us at least maybe a 10,000-foot view of what's really going on in crypto? Like, what are some of the prevailing sectors that are rising, and what's really interesting, and what are some of the hot topics that are sort of capturing people's minds today?
So I guess there are a few core ones. The thing about crypto and the blockchain space is that it moves at 1,000,000 miles per hour. So if you're not, on top of it, having conversations, across the various communities that you should really try and be part of, you can miss a lot in the space of a day. So primarily, like a lot of people who get into crypto, my primary, entrance was via Bitcoin, right? And then you kind of like go down the proverbial rabbit hole, and you enter other spaces. I think for me, that would be Ethereum. And then from there, it would be DeFi and NFTs. So I think some of the hot topics of today, DeFi is still a hot topic. I personally started playing around with a lot of DeFi protocols last year, such as Aave, Maker, Compound, taking it, actually using the protocols. And I think that, just seeing what was down the rabbit hole quite amazed me. Being based in Nigeria, being actually, subject to some of the inefficiencies in the banking system in Nigeria and Africa at large, DeFi, amazed me. So that is definitely a hot topic. It still is right now. We're seeing a lot of, high growing TVL every day across various protocols. So TVL will be, I guess, value locked primarily. NFTs is another interesting thing to me, quite allied to the space that I'm in. So NFTs would stand for non-fungible tokens. In DeFi, in crypto, you find there are a lot of different terms that mean a lot of different things. So DeFi, is decentralized finance. So NFTs will be non-fungible tokens. And I guess the quickest way to explain what a non-fungible token is that I guess cash is fungible. So you can easily interchange cash. If I give you $5, I get back $5. The value is the value, it's fungible. However, the CFO for my house in Lagos is non-fungible. It's only one, it's unique. So I guess a non-fungible token would be a unique item. So that's another hot area. I think the focus on NFTs has been about digital art, but for me, it's much bigger than that. NFTs is almost everything else. Bitcoin is almost like a savings technology. DeFi is something that is more, decentralized. DeFi is decentralized finance, and I think anything related to finance, banking, and that landscape. And NFTs is almost anything else. I mean, you can talk about NFTs for wedding registry, for art, for collectibles, for games, for sports, for ticketing. I mean, the list is endless, and I think we haven't scratched the surface there. And another term that I guess is getting more and more adoption in the space would be DAOs. So those would be decentralized autonomous organizations. I think those have the potential to disintermediate, the current organizations of today. But I think that's still, a pretty new term. I don't think we've seen a lot of movement around there yet. We've seen a pickup in the buildup of DAOs, especially in the NFT space. So for me, I guess those would be the three key areas that I think there's a lot of discourse around in the crypto space outside of Bitcoin. DeFi for decentralized finance, NFTs for non-fungible tokens, and DAOs for decentralized autonomous organizations.
Thanks for that great overview. I think the interesting thing the interesting conclusion I took from Michael's overview is that it looks like cryptocurrencies and crypto assets are really going to impact, many industries and cut across a host of industries. And so whatever industry you're in, there's probably some application or applicability to your industry. So it's something definitely to take note, regardless of what space you play in.
Definitely.
I just noticed, I believe Ruth just joined us, who's our last panelist. Do you mind sort of just doing a quick intro into yourself and then?
Okay. Hi everyone. My name is Ruth Solema, and I'm the CEO and founder of bitmama.io. Nice to meet a couple of people here. I've heard a lot about some of you. Yeah, so what we do on Bitmama is we enable people to buy and sell cryptocurrencies across Nigeria and currently we just entered the Ghana market. So I'm going to say across Nigeria and Ghana market, but mostly we're focused on B2B for now. Yeah.
Thanks. And so dovetailing on sort of Michael's overview, I want to get a little bit deeper into decentralized finance and DeFi. Victor, can you kind of give us an overview or your thoughts on, I guess, going down a little bit deeper, like what do you think the implications of DeFi are to the financial services institution? How do you think financial services players should be thinking about the space and kind of positioning themselves for a future that might be disruptive to their current businesses?
Thanks. That's a loaded question. I think first of all, there's the raging debate surrounding cryptocurrencies as to two things. So on the one hand, there's a question as to what they represent in the sense of a store of value, right? Fiat currency represents a store value on the one hand, and so there's that argument as to how much worth do you place in cryptocurrency from a perspective of store value. Then there's the other angle, which is valuation. What is a cryptocurrency worth and why? And then that brings us into the debate as to, if it's something being manipulated, or there's a finite number of, Bitcoin for example, in existence, who set that limit, who controls that limit, who controls liquidity, what volume is available to trade, and how does that affect pricing? So that's the first conversation, or that's the backdrop to all of the conversations then going on, and the fact that for a long time, there was a debate as to who exactly created Bitcoin, which is perhaps the most globally recognized cryptocurrency. And then there are theories around, who Satoshi is, if it's a human being that exists, if it's a pseudonym for some random person, what's his gender, what's his nationality, where does he live, and all that. But I think for financial services, broadly speaking, I think there has been perhaps greater adoption in the past year and a half, particularly, to some degree, maybe driven by some of the events of the last year and a half with COVID and the lockdowns and the associated pain that businesses have faced. And I think some of the biggest proponents are, some of the events that happened with Elon Musk, for example, coming out to publicly declare that, he would be accepting Bitcoin as payment for Tesla vehicles, and ultimately stating that some parts of their cash reserves will be held in cryptocurrency. And we've seen a good number of bulge bracket banks in the US also to a similar line. I think Jimmy Dimon also did say quite categorically in public that, JP Morgan would be adopting it, and a few other global banks as well, Citi and the rest of them. And I think with those proclamations, you sort of got a wave of confidence and more increased trading activity by retail traders and investors who began to purchase the currency. But having said all of that, it still continues to be something that hasn't become adopted fully, because there's the inherent conflict with most central banks continuing to assert that to the extent that they are unable to control, in a manner of speaking, what happens with the flow of, of money within their respective jurisdictions. Then there's concerns around adoption and, whether or not it will become mainstream. You do have clearly certain leading economies or in more developed economies where the central banks are taking a more, as it were, proactive approach by either announcing plans to institute or to float, their own specific cryptocurrency, or to adopt some form of cryptocurrency for the purposes of digital currencies and, enabling digital transactions. In Nigeria, I think everyone is quite familiar with the stance of the central bank initially, which was to declare, Bitcoin and cryptocurrencies anathema, and to state quite categorically that it wouldn't be allowed. While it has somewhat softened this tone, we are aware that Nigerian banks still do not support wholesale investments or trading activity into cryptocurrencies, and so I guess that's where Ruth plays a role with, P2P type exchanges and all of what happens essentially offline. And I think I would perhaps sum up by saying that, so while that is one concern, there is also potentially the fact that the conversations around, blockchain has been monopolized by cryptocurrencies to the detriment of some of the other more productive use cases that, especially as Michael has outlined, So from, I think, for example, that the argument should actually go down to things like land administration and land registry controls using blockchains, as a way to document, transactions, in real estate. I think blockchains actually lend themselves quite well as a particular, technology for that use case, and serve a decent foundation for building on something more concrete, in addition to some of the other things that Michael talks about, especially the creative area and the entertainment space.
Yeah, thanks for that overview. So I guess, I mean, you kind of raised central banks a couple of times, and I'd like to go to Carmelo, but I wanted to go back to Michael a little bit to sort of, I think Victor raised questions around the validity of cryptocurrencies as a currency. But could you kind of talk a little bit to, like, particularly in the African context and Nigerian context, like, why are people using cryptocurrencies? How are they using them? Like, what value are they getting from them? Because a number of stats say that Nigeria is probably one of the largest adopters of cryptocurrencies in the world as a market. What are Nigerians doing with crypto? Like, why is it all of a sudden, I would assume people are getting value out of using it. And could you also try to make that distinction as well? I think it will be helpful between, Bitcoin as an asset and Bitcoin as a settlement system, which I think it might be worthwhile making a distinction between those two things.
I guess everyone has, different use cases for it. My personal use case for Bitcoin specifically is more of an asset. For me, it's an inflation hedge. As someone who lives, works, generates value and revenue in Nigeria, the Naira suffers from, rapid currency devaluations. For me, it's not a safe currency to hold over the long term. It's safe enough to transact, locally. Now, I saw Bitcoin as an inflation hedge and a savings technology. All right. Now, other users of Bitcoin may not see the same thing. I know that, the people that I know who actually use Bitcoin as a way to settle transactions. Let's say you're an importer importing from China. It's hard to get hold of dollars. You can use something such as Bitcoin, which can be settled almost immediately, devoid of bank delays and bank inefficiencies and what have you, as long as the person on the other side of the trade accepts Bitcoin. So I'm aware of various people in the importation space, importing tiles, various goods from China and from Europe who use Bitcoin to settle those transactions. Even locally, that happens as well. Remittances is another huge use case for Bitcoin and crypto in general. Now, I invested in a platform called Coin Profile, who has similar functionality to a platform called Bitcoins Africa. And they have a remittance platform as well. And I think that what we see is a lot of people actually using crypto rails for remittances. So as opposed to, using MoneyGram and Western Union, you're finding that it's easier, cheaper, faster to actually use crypto rails to get your, remittances back into Africa. And I know that this has been addressed, and the CBN is aware of this, and I know that they've actually come out to try and do what they can to actually get back some of those flows to, I don't want to call it the official system, but I guess it's the formal recognized legal system or regulated system, definitely. Crypto still sits outside of that. So I mean, at a high level, I guess that's what I would use Bitcoin for. Now, if we talk about in protocols like DeFi, we're also talking about using crypto assets as collateral in actually, exploiting some of the benefits of decentralized finance. I've taken out several facilities in a protocol called Aave. Over the years, I've struggled to get loans for my buildings and my studios across Lagos from GT Bank and Fidelity Bank. I'll bring all sorts of documents. They'll tell me to bring all sorts of land titles and what have you. However, once I understood DeFi and the power of it, and understanding that I can actually choose my crypto assets as a collateral to take out short-term facilities, I saw that as, as massively disruptive to the banking space. I think I'll add on to the back of our first question is that the banks should be very worried as to what's coming with DeFi. And with other things, I primarily use Ethereum when I'm purchasing NFTs. Now, you can buy NFTs on various protocols. I mean, Binance have their own NFT ecosystem, you know, other chains like Theta, you know, Kusama under the Polkadot network have their own NFT ecosystems. But I think 80 to 90% of NFT activity long-term will settle on Ethereum. So primarily, if you're using cryptocurrencies there, you have to use Ethereum or each, let's say, we use the words interchangeably, but you'll use Ether. It's the Ethereum network, but you use Ether to actually buy an NFT. I have a pretty large collection of NFTs, from collectibles to land in the metaverse. And, you know, most of those purchases, I use the Ethereum cryptocurrency to actually to purchase those NFTs. And I think we're going to see a lot of adoption on that particular network. So there are multiple use cases across multiple blockchains. And you find that there are different people who utilize cryptocurrencies in various ways. Even in the play to earn ecosystem, you know, in protocols like Axie Infinity and what have you, again, you're seeing people utilize it in a play to earn, sort of like almost like a job. There's some type of job type functionality where you play a game and you earn crypto. In this regard, it'll be a token, I believe, called SLP that they earn there. So yeah, I think out of Africa, if we're talking about Africa specifically, I think for me, one of the #1 use cases based on the investments that I've made would be remittances. I think that's been the quickest way that we've seen adoption. When they talk about Nigeria being one of the key territories where there's crypto adoption, I think it's remittances that's driving that. I also think that, you know, like I said, settling, you know, terms of trade, though it's not done by some of the larger, more established companies, we do find that individual traders, entrepreneurs do use Bitcoin for that. So I think those would be the Africa use cases. In the NFT space, we haven't really seen, you know, a massive take up. We do see some crypto artists like Osinachi, who's one of the most foremost crypto artists out of the continent, who sells artworks, you know, in the range of $30,000 to $40,000, you know, a pop, with, you know, in terms of in Ethereum value, on platforms like Super Rare. But he's like one right now. We see a few others. I'm in touch and I work to a certain extent with some others, but we're not seeing massive adoption in the NFT space across the continent like we're seeing in other areas of the world. So yeah, definitely remittances and settling trade are two big areas in Africa right now. Nigeria most primarily.
Thanks very much. That was pretty comprehensive. I mean, two things I want to add to that that kind of stick to my mind is, or two or three things. I remember, you know, when Nigeria went through its recession in 14, 15, and there was just this, you know, scarcity of dollars, right? You had a lot of businesses, primarily like informal businesses and Nigeria is an import dependent country. I think we all know that, right? Nigeria exports raw materials, particularly oil and gas, but imports just about everything else, right? So there are many businesses in Nigeria that are dependent on getting foreign exchange to kind of basically run their businesses. I remember during that recession, you know, as oil prices basically tanked, there was just this, you know, lack of supply of dollars. And for a lot of people, the only way they could sustain the businesses was originally through Bitcoin. And then you had stable coins, which are basically essentially digital dollars, where you can actually now transact in this digital form of dollars. And so I think out of necessity, frankly, a lot of people were forced to leverage digital currencies because they had no other option. And I think for me, that was like a kind of like a start of this sort of now people going down this pathway to realize that. And if you kind of got what Michael was saying, there's a parallel financial system, there are parallel markets being developed today where regardless of where you live, you can participate if you follow the rules. And I think that's really important because when you look at Africa as a continent, within and even externally, there's so much friction in Africans being able to transact and get access to financial services in their countries, let alone globally, right? Where oftentimes if you have an IP address out of Nigeria, you can't transact, like transactions fail, you're kind of closed out. And I think that's a very important thing to note, that, you know, these markets are permissionless. It doesn't care who you are, where you live, what your name is, what your race is. If you follow the rules, you can basically access these markets. So I think that's really important to note. And so I'd like to pivot now to Carmel and more the regulated side of markets to kind of talk about, you know, what are CBDCs? You know, why should central banks care? You know, what role, is there a role for central banks and financial institutions in this new ecosystem that's being developed? And, you know, what is MTech? What are you doing to kind of support the continued relevance of central banks in this digital age?
I know. It's a funny piece for us to kind of hold here, but I'd be very curious to hear the legal scholars' take on this because I think it's a very interesting concept to talk about. Sorry about that. I mean, do this. But when we think about central bank digital currencies, the concept of a central bank issuing a digital currency might seem either as an oxymoron or as counterproductive given the use cases and the need that the problems also that we hear from the others on the panel. But interestingly enough, what is also coming up as an issue now, and I think Michael mentioned that around the explosion of use cases around digital currency, NFTs, but that fluctuation and that introduction of other assets is also something that not everybody has access to, not everybody understands, and there is a major learning curve for anyone that wants to get into this space. Sometimes we take for granted how passionate and people can be, and you put your time into learning something new. However, there are millions more people that are really trying to get an easier way to do payment or easier way to receive money. And I think the need is real. What we're hearing now and how, the market in Nigeria kind of had to go to Bitcoin, you could make the case that Kenya had to go to M-Pesa because they were trying to find ways of paying. So there's always a need that really drive innovation like this. And I think it's important to recognize that. It's not always something that a bad guy came up with just to get around the banks. I think it's the frustration of the current situation, is the frustration of the financial market that really lead people to find new solutions. So when you think about it like that, one thing that excites us is to say, yes, the innovation is important. Getting people choices and addressing their unique needs given their market is very important. And sometimes it's hard to do that when you are at a commercial bank level, right? When you have a cookie cutter business model, and it's very hard to innovate, it's very hard to understand unique user preferences. And sometimes the regulator have different priorities that don't align necessarily with the normal person down, in the street trying to sell, their basket of goods, whether it's online. And the problems are real, right? So when we started talking to regulators, we didn't particularly go in to talk about, we want to come up with this new technology that's going to bypass you. We made one assumption. We think that even in the future of finance, that you do need some regulatory framework. Something has to exist to be able to provide clarity, confidence, consumer protection. I paid someone in Nigeria and they lost it, right? It disappeared on via peer-to-peer networks. And those things are important to talk about because when it comes to making that market, that financial market resilient, we have to address the gaps, we have to address the needs for regulatory clarity. What I'm hoping, however, is not that regulators stay in the ban mode. Our conversations hopefully really drive around, yes, central bank money is unique. I think we can recognize that. It has its role, it has its benefits. The foreign exchange mechanism in Nigeria makes that very difficult for Nigerians to appreciate the value of the Naira because of the volatility. But some of the benefits that can come from CBDC is what we're also talking to the central banks about, is how can you, in a long term, maybe stabilize your currency, right? How can you potentially diversify your economy from just oil and gas into a broader economic system that can lessen the dependency on US dollars? So those are big macroeconomic and policy conversations that we bring to the table with the technology in order to say, yes, you could chase, trying to provide an alternative to Bitcoin, but the there's a bigger opportunity. If you're a regulator of a country, if you're making monetary policy and working on, how economic policy and understanding how to broaden an economic set and stabilize a currency, then we think there's so much benefit around decentralizing decentralized currency, programmable money, being able to use blockchain to tokenize the country's currency, and enabling it to enter different markets faster and more inclusively as well. So hopefully those are the outcomes, and we don't see central bank digital currencies really being able to replace Bitcoin perfectly, because the upside, if you think about, if you have an asset or an equity or a security, you have an upside on the investment that the fiat and normal kind of cash won't give you, because it's not traded, it's not particularly presented in that case. But you do need alternative vehicles and new service types and new innovation that's going to provide services on top of that. And I think that's something you're familiar with as far as asset management, payment, cross-border payment. How does that integrate with Bitcoin, stablecoin, crypto, NFT, and also CBDC? For us, we love the story around the resilience that combination can provide.
Awesome, thanks. So it sounds like, Carmel, you're saying that central banks can actually be an enabler of this system by leveraging CBDCs. I'm not trying to put words into your mouth, but that's something it seems you're leaning towards. So I want to pivot to like Rotimi, to kind of in that vein, what should regulators be thinking about? Like what, how can they potentially, right, harness this new system to bring investments, to bring innovation into their countries, right? It seems like for the first time in probably recorded history, there is, at least recorded modern history, there's competition for money, right? So central banks, who have been basically, the only issuers of currency, right, backed by the full faith of an economy and ultimately backed by a gun, right? Ultimately, they can enforce the use of currency. All of a sudden, we have competition, right? We have competition with alternative ways and alternative financial systems. So how should regulators really be thinking about this new space and positioning, right, their economies to take advantage of it rather than what could be the alternative, which is trying to stifle it?
Thank you very much, Akin. Great question. And the interventions from Michael, Vito, and Camille has laid the foundation for my response to the question. So I would say deep, but I think at the end of it all, I will be saying to regulators that while regulators are being cautious at the moment, regulators need to look forward, right? So currently, regulators are moving very slowly for obvious reasons, but innovation is moving pretty fast, and so regulators need to step up. Now, having said that, I want to speak broadly to what I call the phase that we are in. Industry 3.0, like we all know, kind of focused on what I would call, or some have called, the little problems: communication, information exchange, retail. And as we ease into Industry 4.0, we are beginning to see technology collide with the harder problems like financial services. Now, like we all know, this is a regulation-heavy sector. And if we recall 2008 in the US and the concept of too big to fail, we understand why regulators are a bit scared as to the interventions of other players in the financial sector. Now, that being the case, we then see why it appears regulators are a bit heavy-handed in terms of their approach. So what do I think regulators should be doing? First, regulators need to have a healthy understanding of the technologies we are talking about here. Healthy understanding will bring about a more enlightened regulatory response. Now, we also know that much of these technologies, the blockchain, of course, the conversations in Nigeria is more about the cryptocurrency, Bitcoin. A lot of folks do not appreciate that it runs on the protocol, and then there's the underpinning technology, the blockchain, right? Having said that, we are thinking that regulators need to understand that, hey, the conversation needs to go beyond cryptocurrencies here. And we look more closely at adopting a national blockchain strategy as an example. Now, when that is done, it gives more confidence, right, across board. Now, talking about confidence, I, for one, appreciate that regulators are concerned about soundness of the system. They are concerned about the health of the system. They are concerned about stability. They are concerned about interoperability, right? And if we go back to 95, when the internet, first became mainstream, kind of, the technologies came on board and the technologies drove the products. There were really no business models and such, and many of those businesses failed, right? Financial services is not one of those that should fail. Healthcare is not one of those that should fail. And so for that reason, regulators should have an enlightened response and think about the governance issues around privacy, right? Privacy comes to play because much of the players in this new space will have the opportunity to hold data in their hands, right? Yes, we understand self-governance, but the regulators need to oversee what do the private players do with data that belongs to individuals. So in Nigeria, whether you categorize crypto as an asset, the Security and Exchange Commission oversees that bit. If you categorize crypto as a medium of exchange, the central bank oversees that bit. Now, it looks as though there was some kind of disconnect between the two, but I'm looking forward to a more cohesive response. But when we consider blockchain as the underpinning technology, then it's neither the Security and Exchange Commission or the central bank that has oversight. It now falls to the more like the Ministry of Digital Economy. So there has to be that alignment between all of these government sectors talking together so that we do not have a dichotomy in response. So in a nutshell, I think the regulatory response needs to be healthy. It needs to move with the tide. But because we are getting into a regulatory era, the players also need to innovate with regulation in mind. So that means the players in the space need to engage regulators proactively and in fact help regulators shape policies. And this is where lawyers come in, right? Lawyers can help influence policy, can help regulators navigate this space, can help players in this industry navigate this space, because these are still the early days. These technologies are only just maturing. See, the central bank digital currencies appear to be a middle ground. And if we look at the question of trust, I believe that more people would embrace central bank digital currencies more than the cryptocurrency because it is backed by certain fundamentals that crypto would necessarily not have. Now, I'm not making a case either way. I'm just saying that all critical stakeholders must be open-minded at this stage because, again, these are early days. Yeah.
Thanks for that, Rotimi. Yeah, so it just seems to me like there are a lot of questions clear around the regulatory side of things. And I think there are also challenges, right? Because as you noted, the current framework and the current regulatory environment we have was built and designed for an intermediated system, right? So whether you have two counterparties and there's someone in the middle, a bank, an institution, right? All of a sudden, the capital or the assets of an individual are now at risk because you have an agent working on your behalf. And so you build a regulatory system around that to protect the principal, right? Such that agents aren't doing things they shouldn't be doing, right? So if I give a bank money and it's like savings and it should be secure, right? The bank shouldn't necessarily be speculating with my money in very high risk activities, right? So the regulator put some curbs around, capital requirements, what you can invest in, things like that. But on the other hand, when we look at crypto and decentralized networks, it's kind of taking the middleman out of the question, right? In many applications, right? Now, Michael can get on a platform, buy digital art, trade it, sell it, anonymously if he wants with people across the world. And he's not encumbered by, right, some guy in the middle saying, oh, fill a form, validate your assets, right? Michael can put up assets on an exchange, he can put up as collateral and he can go borrow stable coins, right? And the asset would manage that relationship, right? And so I think those fundamental shifts in what technology is enabling now, I think pose a real existential threat on the current regulatory framework, because I guess from a first principle standpoint, we should be asking ourselves, like, do we need regulators for certain types of activities going forward? And if so, like, what should the nature of regulation be, right? I'll give an example. For example, in the US, a lot of the regulators now are hiring developers, hiring coders, hiring folks who can read on-chain metrics, because all of a sudden, to some extent, and in some cases, crypto networks are actually advantageous to regulators, right? A question was raised, I think I'll throw it out to the panel. A question was raised around crime and the potential for crypto networks or cryptocurrencies could be used to facilitate crime. Victor, do you have a position on that? Like, what are your thoughts to sort of that question that was raised? It's a question we often hear about, that, well, crypto networks are a den for criminals. Do the facts actually support that?
So thanks for that. Look, I think the answer is quite obvious, right? So there are concerns, essentially deriving from the fact that there was quite a lot of dark activity that moved to the crypto space. So from cyber criminals to art thieves and people looking to essentially mask their financial activity using crypto as a channel for transacting or for moving resources. But my retort usually is, look, for whatever criminal activity might happen or might take place on crypto networks and using cryptocurrencies as means of payment, mainstream criminal activity still happens within fiat currencies and central banks. So when you actually do the percentages, you find that when you look at the value of transactions that are supposedly driven by criminal activity vis-a-vis what you find on the standard fiat platforms or central banking system, it's not comparable, to be honest. And I think if anything, what cryptocurrency gives you is a pathway to actually trace transactions. Yes, I recognize that ultimately the way blockchains are built, you might not be able to identify the specific wallet, or at least so we thought, of whoever these criminals are. But I think with recent activities by the FBI, I think there have been some breakthroughs around identifying, down to the ultimate beneficial owner or recipient of, the proceeds of crime. So if anything, I think blockchains actually do lend themselves quite well to the argument that they should help, track criminal activity.
Yeah, thanks for that. And I think to the last reference that Victor was making, as an example, there's a criminal ring that was traced out to Russia that basically shut down a key pipeline for oil and gas in the US a few weeks ago. And they wanted a ransom. They basically encrypted all the data. And in retrospect, right, the company worked with the FBI they did pay the ransom, but the FBI was able to trace the movements of those cryptocurrencies, and effectively, I think a portion of them were kind of domiciled on a server that was within US territory, and they got the provider to basically freeze those wallets, and a lot of that capital was recovered. And if you look at long-term statistics, the percentage of illicit activity on crypto networks is falling. And the reason for that is crypto networks are actually a very bad way to to support crime, because transactions are actually mostly transparent. Like, there are ways you can kind of get around it, but for all intents and purposes, like, regulators, at least in the West, have the capabilities to kind of trace some of these illicit activities and get recourse very quickly. Now, when you juxtapose that with the current banking system, American banks are still fined billions of dollars every year for facilitating fraud and fraudulent activities, right? So when people kind of raise that question, I tell them, look, the #1 vehicle that enables crime in the world is the $100 bill. Real criminals settle transactions in $100 bill cash, because it's not traceable, right? You can't trace that transaction, and that's still the best way to kind of facilitate crime. And using the current financial system to launder money is still the best way for real criminals. Like, poor criminals use crypto networks. Real criminals still realize the banking system actually helps them obfuscate some of these activities. And so I think the facts kind of address that issue, in that there's very, very little, from a relative standpoint, there's a very, very little illicit activity that's supported by cryptocurrencies, because it's just a bad way to do that. So moving on to sort of another question that was asked in the group, or in the Over app, there were some questions sort of around, I'm trying to summarize a question here. Yeah, so it's a question around, how do legal professionals, and I think that's a big core of our audience, like, how do legal professionals sort of position themselves in this burgeoning space? We talked about regulators needing to sort of modernize and think about, how they can kind of adjust regulatory frameworks to feed this new world. But what's the role for legal professionals? What's the role for lawyers in this space? I don't know, Rotimi, if you want to take a stab at that question. Is there an opportunity for legal professionals to really maybe drive some of the conversation around, for example, we talked about DAOs earlier on, which are decentralized autonomous organizations, which are basically like cooperatives that just live on chain. They live in digital space. They don't have they're not incorporated in any domicile. It just exists in the digital space, and they have all sorts of complicated structures in how they run. Do you have any thoughts on that, Rotimi? If all of a sudden anyone can start essentially a digital corporation, like, why do I need a lawyer? Like, what are some of the things lawyers should be thinking about as they position themselves going forward?
A great question. And straight up, I would say that first, we need a crop of lawyers with the skills and the ability to be able to guide players in this space, emerging players, guide them, to find creative and strategic approaches to navigate what we have all seen as complex regulatory environments. That's one. We need lawyers in this space who will be able to understand, adapt to, and also influence government regulation to foster innovation. So that's on the one hand. On the other hand is, just breaking down what you described now, companies living on the blockchain, and it's going to be a web that will need critical support, right? Because there are regulations in place that guides formations of company, restructuring of companies, and all of that. So first of all, for those kind of autonomous companies to thrive here, again, lawyers need to be active to ensure that there is an enabling environment to make it work. That's one. Two, help clients who would want to play in this space, again, navigate the complexities. Now, all of this would only happen where lawyers have a thorough understanding of these concepts, of these notions, and of this space. Thank you.
Sorry, can I add something on that?
Sure, Michael.
Yes.
Sure.
So I think another area that I found, so, just like I said, playing around the space, you find a lot of things. And when it comes to copyright, I think lawyers should really look into what's happening in the NFT space, right? I think that, because these are, unique items, these are, you're transferring IP, essentially from one person to another. And I think that there's been a lot of confusion as to, what you can and what you can't do with these products. We see a lot of people create derivative products of certain NFTs. Now, I've bought NFTs that may have had some, some level of inspiration, maybe from a Marvel comic, right? Now, I'm not allowed to go and print, transfer, reproduce, make magnets out of these NFTs. I can enjoy that artwork. I'm the owner of that specific artwork. I can resell it on, exchanges like OpenSea and what have you. However, with other NFTs, I'm a big collector of some avatars called some collectibles called Meebits that are owned by a company called Lava Labs. Now, within that ownership of Meebits, I'm allowed $100,000 worth of transactable value as to what I can do with that NFT. So I can actually print t-shirts with my Meebit on it and sell it and actually own, and those sales are mine up to a maximum value of $100,000. And I think there are a lot of nuanced conversations about what you can and what you can't do with NFTs. Another NFT I own is something called CryptoPunks. Recently, there was a derivative CryptoFunk released that was just a CryptoPunk faced a certain way. The company, again, Lava Labs, reached out to the company that did the derivative work and asked them to pull it down, whereas there are other derivative works of CryptoPunks that are allowed to stay up. So I think with the NFT space and what you can do in terms of, the ownership of that IP, once that IP is being transferred to you, there's a lot of conversations around what's happening there. And I mean, I'm talking about some of the guys who are the most advanced in the NFT space are still kind of confused as to what you can and can't do. I mean, ultimately, in the true sense of copyright, it's pretty straightforward. They lay down copyright laws. I think the NFT space is going to actually turn a lot of things on its head. And I think that if lawyers are looking at it, something to dig their teeth into, really looking to NFTs and what that actually means for copyright. I think right now it may not have use cases in Africa specifically, but I think that will grow. I think one of the great things about understanding blockchain is that that expertise is not limited to Nigeria, it's not limited to Africa. If you become an expert in NFT copyright out of Lagos and you're servicing clients in San Francisco, it's a possibility. So for me, I think that's something I'd just like to add to the conversation.
Yeah, I think that was very well taken, because when you think about it, to Michael's very early point, when he kind of defined NFTs, NFTs are everything else, everything other than currency, right? So you can imagine any kind of digital asset, movies, music. A lot of these assets are being traded, unique assets, digitally in a peer-to-peer way. And that's still, a lot of these assets are also traded based on agreements and contracts, basically is what Michael is kind of alluding to. That they're actually contracts that kind of regulate and determine how an asset can be used, what your rights are towards that asset. And so if you imagine like a whole burgeoning system transitioning from the physical space to the digital space, all of a sudden, the law still persists, right? You can still have people that bring cases against people for the wrong use of an asset or the wrong use of an asset that's already copywritten. And so that opens up to me a huge opportunity space, like Michael said, for the law to continue to sort of, manage that space. And like he said, like lawyers who understand what's going on, who understands the questions that are now being raised and the implications of what's happening in this digital space with all these assets being exchanged, right? They become very, very relevant to me into the future. And it opens up, in my view, new opportunities. So I think we're kind of a little bit running out of time. We have a few more minutes to go. I'd like to do just a quick sort of circle around the group. We can start with Victor, but I guess the key question is, where do you see the space going from your perspective over the next 5, 10, 20 years? Like, what's the vision for the future? And why should people really care and position themselves for the future that I think is coming?
Your summary captures it. It's the future. you know, so the earlier you embrace it, the better. And I think, look, in 5-10 years, it'll become increasingly mainstream. That's really the summary for me. Thank you.
Thanks. Michael?
Yeah, I mean, I agree. I think it's the future for now. I think, you know, technology is constantly changing. So I think, yeah, understand it, embrace it. I'm not a big, you know, supporter of speculation. I think right now, for me, that, you know, the market is fundamentally undervalued. A lot of people have a lot of things to say about the crypto space, about Bitcoin and what have you. I think understand it for yourself, understand it, I think, from an economic perspective. I did a master's in economics, and I've learned way more in the crypto space about finance and economics than I've ever done in my life. So I think it's something that, you know, that you know, everybody's affected by money, and the development of these money networks affects everybody. So, you know, no one should put their head in the sand, understand it, embrace it. A lot of the terminology may come at you quite, you know, may seem quite difficult at first, but I mean, it all makes sense eventually. You know, things like terms like fungible. First, I was like, why use fungible? You could have used a much easier term, you know, because it's just something that you can't change for something else. But, you know, it is what it is. And I think these terms are interchangeable. I think they'll forever change. So, you know, look at applications. I think a lot of the guys listening to this are Nigerian lawyers based in Nigeria. I think one of the key things one should understand is that you know, we shouldn't limit ourselves to Nigeria. We shouldn't limit ourselves to Africa. I think one of the things that crypto unlocks is a potential global view on everything. I think prior to that, I was locked into a lot of conversations across Africa, across Nigeria. With crypto, I'm literally talking to people in Southeast Asia. I'm talking to people in San Francisco. Communities are being developed, you know, and actually a lot is being disintermediated. Right now, yes, it's potentially the banks, you know, it's the art space, but it goes much wider than that. And I think that one should just cotton onto specific areas. I think when I first started as well, I also said things change at 1,000,000 miles per hour in the space. Hold on to something, pick something that interests you, and I think focus and create some specialization around it. I think that's what I'm trying to do now as well. The rabbit holes are many, but don't be scared.
Thanks. And Carmel, like, you know, what does 15 years look like that's great for central banks? Like, what is that picture, and what's your vision for the future for central banks?
So interestingly enough, Michael, I totally agree with that. We decided to pick the central bank digital currency space out of all the different holes that were being created in the space, and kind of went with that. We love it because primarily, if we're successful, you would have different financial market infrastructures that enable innovation like this, that enable the paradigm shift in a way that thinks about inclusion that wasn't done with the current financial market that we had. Inclusion wasn't a priority. To think about inclusion as part of that, but also innovation and being able to say that the fintechs have a role, the banks have a role, in innovation for the user is something that we want to enable. So I'm actually very excited. I know we're talking about this in the context of a legal conversation today. This is a major paradigm shift, guys. And I think from a legal perspective, we need help with, you know, embedded governance is a term that is coming more and more now, as far as embedding the rules and embedding the laws and what will drive the transactions in this new digital world. So I think there's a lot for legal folks to get into, to sink their teeth into, but that globalization, the fact that this is a limitless type of technology and type of innovation that we're talking about is going to impact so many people. So hopefully, if we're successful, central bank digital currency will be an enabler for innovation, not a detriment.
Yeah, thank you very much. And Rotimi, the last 15 seconds, I'll give you the last word.
To stay, to all the lawyers tuned in, get knowledge, broaden your knowledge. To the regulators, adopting a balancing regulation is key. We need models that will be tailored to the innovation around regulation itself. Thank you.
All right, thank you, everyone. I think our time is up. I hope you at least got a perspective on what's going on in the space. And that's it. Thank you very much.
Thank you.
So,
Thank you, and thank you, everybody.
thank you to our moderators and panelists, and we thank you.
Thank you, everyone.
Everybody and Bloomfield Law. For please, if you have the questions, your questions through the enjoy the rest of the conference. Thank you very much. Bye.
Thanks. Bye.
Thank you. Bye-bye.